Right, what's up, y'all? So this is the first lecture on the market recap um, of today, which is February 3rd, 2026. So we'll be going over today's price action. As you all know that we've been looking for lower prices, and I told you all that today I'll be looking for lower price as well. But unfortunately, I couldn't trade today. Uh, Sorry for that. I'll probably catch you guys tomorrow. But if you have watched the week market outlook video, you knew that we were looking for lower prices and we were waiting for price to give us some sort of SMT. And I'm gonna show you what we had today. Let's take ES. Where's ES? Okay, there it is. So I'm gonna go into the. Oh, let me just show you what's here. All right. So we had this inversion fair value gap. Orange. Let's make it orange. All right. So we have a inversion fair value gap to the left, if you can see it. All right. And this was the Friday's high. All right, Friday's candle, and you could see that we traded through that high and rejected from that inversion fair value gap. Now here you cannot see uh, too much information. What I'm about to share with you, it's on the lower time frame, alright? So you gotta watch the full video. So what I was talking about, alright, there's nothing much on the daily time frame to be honest. So I told you all that I'll be looking for these lows, and initially to these lows. Alright, I was bearish, you all know that. So let's go on a 4 hour time frame. So on the 4 hour time frame, what do we have? All right, what do we have on the 4 hour time frame? You could see that we open up this week, open up, traded down, took out this minor sell side right here, this sell side right here, and then traded up into that daily inversion fair value gap and took out Friday's daily high, not this high, but Friday's daily high, and this was an internal high. And if you have seen the previous day's trade, then you know that we took the trade from here up to this high, but we were looking for these highs to be taken, and I mentioned that uh, price could initially trade up into this 4 hour order block, but it didn't. But at that time, I told you that at least we want to see some sort of SMT when it create a swing high right here after taking out this internal high, and you could see that we have this 4 hour SMT with ES after taking out this internal high right here. Then we took out Friday's high right here, Friday's high. All right. So on the 4 hours chart, you could see that we have this SMT. We took out Friday's high and we traded up into that uh, daily inversion fair value gap, and you could see how perfectly or how precisely price stayed within that inversion gap. And now on the 1 hour time frame, what do we have? So if it's Davis, you're probably not gonna believe. So around 7:30, I was looking at this, but I had a like it was like irritating headache at the time, so I couldn't trade. I went to sleep at the time. I took a nap for a couple of I think about a half an hour. Okay. Oh man, yeah, I got a call from one of my friends, so had to take it, bro. Okay, where we, bro? So as of uh yeah. So here I was looking at short price, and I could have taken this short right here, and you won't believe it. So let's not get into that, but look at here. After that S&P formed, after sweeping that Friday high, when this candle closed, right, this one, this candle, so that complete that swing high and complete that SMT. If you know how I take an SMT or consider an SMT valid, is to see an clear swing high or swing low from. Now that this here is a clear swing high, and when did that form? That formed after we sweep the Friday high, and after that SMT formed. All right, whatever it is, you get my point. So right here, that was the candle. Why that one? No, my bad. This was the high, I think. Yeah, that was the high. So now, after that clear swing high formation, what do you want to see? You want to see a market structure shift, and you look here carefully. When price was trading up into that Friday high, what it did, it left a swing low right here, a higher low to the left, a higher low to the right. There is a swing low, and after this swing high formation, price broke down below that. So now we have our market structure shift right there. Right there we have our shift. From this point, you will be looking for lower prices only. All right. Now around 8:30, we can price trade up into. All right. So we have this order block right here, 1 hour order block, and if we take the 50% of that, now let me take this off, and you'll see the magic. So this hourly candle, take we're gonna use the body, and you could see this one here, 8 a.m. candle traded up into the mean threshold of that 1 hour order block. Now let's get into a lower time frame. So I'll first explain why price dropped from there, and then I'll show you what are the target objectives and why I knew that probably price would trade lower today. All right, this is the mean threshold level, the midpoint 50% of the daily order block, and we also had where is the breaker? Where's this breaker right here? This breaker right here. All right. So this is the 50-minute breaker. All right. On the 50-minute time frame, you could see we had another internal low right high right here. This one. And if you know my model, what I usually look for is that first we create a market structure shift. All right. Within that external high and external low, that dealing range that caused that shift, we want to look for some sort of internal high within that dealing range on the lower time frame. So this is the 50-minute time frame. This is our external high. This is our external low. Right, this here, this whole range. All right. So within that range, where is the internal high? That internal high sits above the 50% of the dealing range. So it's in premium. So we expect price to take out that. And after taking that, I mean, after stripping that out, what do you want to look for? You want to see another shift on the lower time frame. Probably it can be like 5-minute time frame or maybe 1-minute time frame. So we'll look for that. And at this time, there wasn't any SMT. All right. There wasn't any SMT. And why did price didn't take out this high? You may ask me. Like, look at here. After this market structure shift, where is the 50% range? Right here. And we had a fair value gap right here, a small fair value gap, if you can see that. And price traded up into that, broke over, took out that external low. So we have done our work here within that gap, and this high becomes a significant high. more like an intermediate term high because we filled in a fair value gap with that move right there. So that's our intermediate term high. So if you want to look for lower prices, we don't want to see price taking out that high, and that's what exactly happened here. Now again, there is the hourly candles, hourly bearish order blocks low, and there is a mean threshold. So after we took out this internal high, I told you we'll be looking for a lower time frame market structure shift. So what do you see here? And this yellow shaded box is the 15-minute bearish breaker. All right. So after we take that out, what did price do? Price created and swing high right here, traded up into this internal high again, then broke below that low, this low. So when you broke below that low, that you take that as a shift in market structure with the narrative in mind that we have done our work up here, so price is not going to go up there, and this is the main threshold of that hourly order block. So we had a buy side just below that, so price traded up into that, took out that internal high, and stayed within that 15-minute bearish breaker. You could see there is no body outside of that 15-minute bearish breaker. Now after this shift, where did price traded up into? We had this rejection block right here. This is the rejection block. That's the rejection block on the 5-minute. Now around this time we want to see is if there's any kind of SMT at that time, this side and this side. I think we have SMT right there. Let me take out that candle. Yeah, so we have SMT exactly with that this candle right here. This candle right there. No, my bad, my bad, my bad. Yeah, bro, what the? Excuse me. Oh man, do you have SMT? No, we do not have SMT at that time. So yeah, we gotta read. I think there was SMT on the lower time frame, on a 3-minute time frame. Let's see if there is SMT on the 3-minute time frame. No, they both have taken out that. There is no SMT. Now whatever. All right. So after price tap price tapped into that rejection block, we go on a 1-minute time frame. All right. Now we do not take any trade until there is an SMT. All right. So I'm not gonna tell you that there was a trade right here. All right. And you could see when price traded up into that, it rejected immediately and then broke lower. And we had this inversion gap. Let's make it blue. All right, we had this inversion fair value gap right here. When it broke lower, you could see price tried to go through that, and this time this right here is 830. So you could take this as an 830 Judas swing. So that is another confluence that probably price is going to continue lower, and after that price broke lower, closed below that inversion fair value gap, and you could see we tried to price traded up into that inversion but failed around the midpoint. There is no body above the midpoint of that gap. All right, now this high and this high. So okay, I think on the indices there is SMT this high. Let me check on the indices chart, bro. So S&P 500, yeah. So look here. Did S&P took that out? Yeah, S&P took it out, but Nas didn't take it out, I guess. No, Nas also took it out. So there was no S&T. Wait a minute. All right, whatever. So there was no S&T today, and even if it moves down from here, you do not take a trade until you see S&T. Now, that's how I usually trade. You can enter from here if you want to. Like we broke below that, this low right here. After that 8:30 judo swing, it broke lower here. All right. Now, after that, we had this order block, bearish order block, price traded up into that and broke lower. Okay. So we didn't had any SMT until this time here, 9 a.m. All right, so around 9 a.m. we took out this high on the 1 minute time frame. And if you look at ES at that time, did ES took that out? It didn't. It made a lower high right here. So that's where you enter. That's where you enter. So you trade, your setup would look like this. Let me put this right down here. Your setup would look like this. All right. From here, targeting, you can probably get out below this low. That's more like a 6-hour trade, but we were bearish for the week. I mean, we are bearish for the week, and we've been looking for a lower price, so you could have let it run, and that's all right. Let's not get into that. That's more than 50-hour trade. All right, so we had our first S&P right there. That's where you enter, and on the 5 minute time frame, what's that? On the 5 minute time frame, there was another breaker right here. I'm gonna take this off for a minute. All right, I'll take this off. So on the 5 minute, you could see that we had this bearish breaker right here. All right, now what do you see here? Price traded up into that bearish breaker, but failed around the midpoint and rejected from there. And after that, we had this small swing low right here, and it broke below that. So this candle's high, this one right here, we do not want to see that high being taken out. All right, because we already took out multiple internal highs right here, and we have our shift here. After that shift, we took out another internal high right here. So we have taken out and enough like buy side. All right. So now that we know that price gotta continue lower, we don't want to see this candle's high get taken, because we take that as the last candle that caused the second distribution stage. All right, that's the second stage distribution. uh, it's probably totally different from what market maker sell model usually look like. Therefore, for them, probably this is a low risk cal. Then is the first distribution, this is the second stage distribution. For me, um, I don't like to enter at the very top. All right, so this would have been your first entry. This year would have been your second entry. All right, now on this time when it broke below that low, this low right here, we took out this high, but look at here, yes, didn't took that out. So that's where you enter, and we had this order block right here. Now this order block, this up close candle, is also an propulsion order block. This one. Why that isn't a propulsion order block? Because we had these two consecutive down close candle within this bearish breaker. So once it broke below that swing low, the first up close candle that trade up into these two consecutive up close candle becomes a propulsion order block. And on the 1 minute time frame, you could see we never closed above that propulsion order blocks low, you could say. and then it ended up going lower. Then we had this inversion gap right here. You could see the reaction. Now I'm gonna just put on the PDRS for you to uh, see it more clearly. All right, there you go. Why I take these as a PDRF. So when price went up, it took a retracement from that. These two consecutive down close candle as a bullish order block. So you could see how price reacted off of them. I mean, went through them and retested that level. And then around 9:30, we had this gap and price never came up and continued going down. All right. And that was the business. And now let me take you to the target objectives. All right. It's gonna 1 hour time frame. So we are looking for these lows to be taken, but what could you have targeted if you were in this trade? So when price broke this first swing high right here on the 1 hour time frame. So usually I use the 1 hour time frame. Most of the time I use the 1 hour time frame, I would say. So when it broke this swing high, that was the first shift before we traded up into this buy side. All right. Now we take that first dealing range that formed after sweeping that after, I mean, causing that shift. Now you will only gonna target. I mean, you're gonna target any sell side below that 50% range, and you could see that when price traded down below that 50% of this first dealing range right here after this shift, it showed some reaction off of that. You see that, and then we had this order block right here. So yeah, it could have targeted this 50% range of this dealing range and also that order block. So that would have been your trade. And yeah, that's that's I think that's what I was looking for today, to be honest. And it delivered very nice. Then I told you all around 7 a.m. I think price probably gonna go lower now because I at that time I saw that FNT with ES. And for the rest of the week, I'll still be bullish. Um, if not, probably tomorrow, um, price could, I would say, yeah, I want to see this low gets taken first with another down close candle like this, whatever it is. I want to see another four candles sweeping that low, and then we would have a fair value gap. And I think probably this gap gonna be filled in tomorrow, and then we'll probably continue going down. If not, it's probably gonna continue going down from that point. All right. So that's the analysis. I hope you understand something and it was helpful for you. If it was, I'm glad. And I'll catch you guys onto the next one. All right. Stay safe.